Verna Whitfield is 74 years old. She lives in a small brick house in Sedalia, Missouri, the same house she and her husband bought in 1978. Last spring, she spent 2 nights in the hospital with pneumonia. 3 weeks later, an envelope came. $9,411. Verna sat at her kitchen table and did the math the way people on a fixed income do the math. She gets $1,482 a month. She started calling the hospital to set up a payment plan. $25 a month. She was going to be paying that bill until she was 105 years old. Here is what nobody at that hospital told her. Verna did not owe that money. Not most of it. Not any of it, as it turned out. There was a federal rule sitting there the whole time that said a hospital like hers has to wipe that bill for a woman in her situation, and they are required by law to tell her about it, and they simply did not. She found out 11 months later, by accident, from a woman in her church. I want to tell you what that rule is. And I want to tell you about 4 more bills just like it, because the hospital bill is not the only thing you are paying right now that the law says you do not have to pay. Add up the 5 of them and it comes to $5,900 a year. Every year. Money that stays in your checking account instead of leaving it. Over 20 years of retirement, that is $118,000. And I need you to hear the next part clearly, because it is the part that makes me angry on your behalf. Not one of these 5 is a loophole. Not one of them is a trick. Not one of them requires a lawyer or a fee or somebody's paid program. Every single one is written into the rules already. The only reason you are still paying them is that nobody sends you a letter. There is no automatic enrollment. There is no phone call. The systems are set up so that if you do not ask, you pay. And almost nobody asks, because almost nobody knows there is anything to ask for. I am going to go through all 5. The 5th one is the biggest. It is the one that can take a bill of $2,000 or $3,000 a year and take it down to nothing, permanently, for the rest of your life in that house. I am saving it for last on purpose, so stay with me. Here is how this is going to go. For each one, I will tell you what it is in 1 sentence. Then I will tell you what it is worth in real dollars. Then I will tell you exactly who qualifies. And I will spend most of that time knocking down the reasons you are about to tell yourself that it is not you. And then I will give you the exact words to say when you pick up the phone, because that is where most people freeze. My name is Ellis Grant. I am not a lawyer. I do not work for the government. I do not work for Medicare, and I do not make a single dollar, whether you claim any of this or not. What I do is read the rules, the actual rules, the fine print, the parts written in language designed to make you give up, and then I say them out loud in plain English. That is the whole job. And before we start, I need to take something away from you. I know what you are already doing. I have been doing this long enough to know exactly what happens in the first 90 seconds of a video like this. You are already building the sentence in your head. That's nice, but I make too much. Or that's for poor people. Or I own my home, so I won't qualify. Or the worst one, the one I hear most. I've never qualified for anything in my life. I do not care what you think you make. I do not care that you own your house. I do not care that you got turned down for something else in 1996. I am asking you to do one thing for the next 20 minutes. Do not disqualify yourself. Let me tell you the actual numbers, and then you can decide. Because here is the thing about self-disqualification. It is free for them. Every senior who talks themselves out of applying saves somebody money. and it is never you. Before the first one, let me answer the question you are going to ask me all the way through this video. If all of this is real, and it is sitting right there in the rules, why has nobody ever told me? I want to give you the honest answer instead of the dramatic one. Part of it is that nobody is assigned to. There is no office in this country whose job is to look at your file and say, this person is leaving money on the table. Social Security administers Social Security. Medicare administers Medicare. Your county assesses your property. Your hospital bills you. Not one of them is responsible for the whole picture of your money, and so nobody sees the whole picture except you. Part of it is that the benefit and the bill live in different buildings. The people who send you the bill are usually not the people who run the program that forgives it. The billing department at that hospital in Missouri is a contractor. They are measured on collections. Telling Verna about the program that erases her balance is, to them, a loss. So let us fix that. 5 bills, starting now. Number 1. Your hospital bill. Here it is in one sentence. If you were treated at a non-profit hospital, federal law requires that hospital to have a written financial assistance policy and requires it to consider you for it. And for a person on a fixed income, that policy very often wipes the bill down to 0. Now, the number. Somewhere around 3 out of every 5 hospitals in the United States are non-profit. They pay no federal income tax, no state income tax, no property tax on that big campus. In exchange for that, Section 501R of the Internal Revenue Code says they owe the community something. One of the things they owe is charity care, a written policy that says who gets their bill reduced or erased, and by how much. For a single person living on Social Security, in most hospitals' policies, the answer is all of it. Full write-off. I have watched bills of $4,000, $9,000, $22,000 go to 0 on one form. Now let me knock down the reasons you are about to disqualify yourself. You think it is too late. The rule says the hospital has to give you at least 240 days from your first billing statement to apply. That is 8 months. And I will tell you something the billing department will not. Many hospitals will take an application after that window, and many will refund payments you already made once the bill is forgiven. Verna, in Missouri, applied 11 months later, and they still wiped it. You think you make too much. Every hospital sets its own income line, and they are far higher than people assume, very commonly, 2, 3, even 4 times the federal poverty guideline. You think owning your home ruins it. In most policies, your home and your car are not counted at all. You think it is a handout. It is not. It is the price that hospital agreed to pay for not paying taxes. You are one of the taxpayers who covers what they do not pay. Collecting on that is not charity. It is a receipt. Here is what you do. You call the number on the bill and you ask for the financial assistance department, not billing, financial assistance. And here are the exact words. I am requesting an application for financial assistance under your 501R charity care policy. Please place my account on hold and stop all collection activity while my application is pending as required. And please mail me a paper copy of the plain language summary of the policy. Say 501R. Say 501R. Contus. My axgodd when the R was tree the misstand nouted him and remembered, and counted, and sound his place continued to say existence. In please bethantel tautskide finwid your policy, if you tell do the rule. You are not going to be talked out of it. Quick warning before I go on, and please listen to this part, even if you skip everything else. The minute you start looking into any of this, the sharks smell it. Here is what they do. Somebody calls and says they are a benefits recovery specialist and they can get your hospital bill forgiven, or your property taxes reduced, or your Medicare premium refunded for a fee. $299 or a percentage of what they recover. Every single thing in this video is free to apply for. Every one. There is no application fee, there is no processing fee, and there is no such thing as a benefits recovery specialist. So here is the rule, and it is a simple one. Nobody who is really going to help you with any of this will ever ask you for money, and nobody who is really going to help you will ever call you first. You call them. Always you, always first. If it came to you, a call, a text, a letter with a deadline, a man at your door, it is a sale, not a benefit. Number 2, your phone bill and your internet bill. One sentence. There is a federal program called Lifeline that takes a fixed discount off one phone or internet bill per household every month, forever, and about 70% of the people eligible for it are not enrolled. The number, $9.25 a month off. That is $111 a year. If you live on tribal land, it goes up to $34.25 a month, over $400 a year. And here is what most people miss. The discount is not just for some cheap flip phone plan. You can apply it to a major carrier's plan or to your home internet. And several carriers have plans priced so that the Lifeline discount takes them to zero. Not reduced, zero. Who qualifies? It is income-based. But here is the part that matters. You do not have to prove income at all if you are already in certain programs. If you are on Medicaid, or SNAP, food stamps, or SSI, or a veteran's pension or survivor's pension, or federal public housing assistance, you are automatically eligible. You check a box. That is the whole test. Now let me stop you from disqualifying yourself again. $111 does not sound like a lot next to $9,000, I understand. But this one takes about 15 minutes once, and then it pays you every month for the rest of your life. 15 minutes for $1,100 over 10 years is the best hourly rate you will ever earn. Cecil Barnes, 79, out in Bakersfield, skipped this one for 4 years because he thought it was for people worse off than me. Cecil is a widower living on $1,900 a month. He was on the list the whole time. 4 years is $444 he handed to a phone company for no reason. How to get it? It is one federal application run by something called the National Verifier. You go to lifelinesupport.org or you call the support center and they will mail you a paper application. Then you take the approval to your carrier. The exact words when you call your phone or internet company afterward. I have been approved for the federal Lifeline benefit. I need you to apply my Lifeline discount to this account, and I want to know which of your plans qualify for the Lifeline rate. That second half of the sentence is the important half. Ask which plans qualify. That is where volunteer them. Numturned. One sentence. A very large number of seniors are legally not required to file a federal return at all and are paying a preparer $200 or $300 a year to file a return that says they owe nothing. Here is why. When you turn 65, the tax code gives you a larger standard deduction than everybody else, an extra amount stacked on top of the regular one, and another extra amount if you are also a widow or widower. On top of that, for tax years 2025 through 2028, there is an additional senior deduction of up to $6,000 per person for those 65 and older, phasing out at higher incomes. And then there is the part that surprises people the most. Social Security itself is often not taxable. Whether any of it counts depends on your total income. And for a great many seniors whose income is mostly or entirely Social Security, The taxable amount is zero. Put those together, and here is what it means. If Social Security is most of what you live on, your taxable income after those deductions is frequently below the filing threshold. You do not owe. And if you do not owe and you are below the threshold, you are not required to file. Iris Kowalski, 71, up in Duluth, paid a storefront tax office $280 every February for 6 years. $1,680 for a return that came out to zero every time. Nobody at that office ever told her she did not have to be there. Why would they? Now, and this matters, there are good reasons to file even when you are not required to. If any tax was withheld from a pension or an IRA distribution, you must file to get it back. If you qualify for a refundable credit, you file. If your state has a property tax or renter credit that runs through the state return, and many do, you file. So I am not telling you to stop filing. I am telling you to stop paying somebody $300 to do it. The exact words, and this is a phone call to a free program, not to the IRS. I am over 65, and my income is mostly Social Security. I would like an appointment with tax counseling for the elderly to have my return prepared for free, and I want to know whether I am required to file at all. Tax counseling for the elderly and its sister program, VITA, are IRS-sponsored, staffed by trained volunteers, and they are free. They are usually at a library, a senior center, or a community college. And one more line worth knowing. More than 40 states do not tax Social Security benefits at all. If your state changed its rules, and several have in the last 3 years, the return you have been filing may be wrong in your favor. Number 4. Your Medicare Part B premium, and every copay attached to it. One sentence. There is a program that pays your Part B premium for you, and for the people in its top tier, it becomes illegal for a doctor or a hospital to bill you for Medicare copays and deductibles at all. The number first, because it is large. The standard Part B premium is now north of $200 a month, and it comes out of your Social Security check before the check ever reaches you, which is exactly why most people do not think of it as a bill. You never see the money, so it does not feel like money. It is about $2,500 a year. The programs are called Medicare Savings Programs, run by your state. There are 3 tiers. The top one is called QMB, Qualified Medicare Beneficiary. If you are on QMB, the state pays your Part B premium, and that $200 goes back into your monthly check as a raise. But QMB does something else that almost nobody knows, and this is the part I want you to write down. Federal law prohibits any Medicare provider from billing a QMB enrollee for Medicare deductibles, coinsurance, or copays. It is not a courtesy. It is a prohibition. If you are on QMB and a doctor's office sends you a bill for a Medicare-covered service, that bill is improper, and it does not matter whether they knew, and it does not matter whether they meant it. Otis Freeman, 77, in Chattanooga, was on QMB for 2 years and paid every copay that came in the mail because he assumed a bill is a bill. $610. Every one of them was improper. He got it back. Now the self-disqualification, and this is the big one for this program. People hear state program, think Medicaid, and decide they have too much saved. Listen carefully. There are income and asset limits, and they count your savings, not your life. Your home does not count. One car does not count. A prepaid burial fund does not count. Your household goods do not count. And a number of states have removed the asset test entirely. The exact words, you call your state health insurance assistance program, SHIP, which is free counseling in every state, or your state Medicaid office. I want to apply for the Medicare savings programs. Please screen me for QMB, SLMB, and QI, and tell me which asset rules my state uses. And if I am approved for QMB, I want to know the date my protection from provider billing starts. That last sentence tells them you know the billing rule exists. It is a very different phone call after that. Number 5, the one I have been saving. Your property tax. One sentence. Nearly every state in this country has a law that reduces, freezes, or completely eliminates property tax for homeowners over a certain age. And it is almost never applied automatically. This is the biggest one in the video for 2 reasons. The dollars are the largest, and it is the only one that compounds. Most of these are not a discount for 1 year. They are a freeze. Your assessment stops moving. Every year that property values go up around you and your neighbor's bills climb, yours does not. The number depends on where you live, and it is not small anywhere. It runs from about $1,000 a year, on the low end, to $3,000 and more, and in a handful of places it goes to 0. There are 4 different shapes it takes, and your county probably has more than one. The senior homestead exemption. It takes a chunk of your home's assessed value off the books before the tax is calculated. The senior freeze. Your assessed value is locked at the year you qualified. This is the one that compounds. The circuit breaker. If your property tax is more than a set percentage of your income, the state credits you back the difference. This one is aimed exactly at the person who bought a modest house decades ago and now lives in an expensive neighborhood on a small income. And the deferral. The state pays your property tax now and collects it from the estate later. Nobody takes your house. You just stop writing the check. Louise Ferris, 76, in Ocala, Florida, had lived in her house for 31 years. Her tax bill had climbed from $800 to just under $3,000, while her income went up by a cost of living adjustment. She applied for the senior exemption and the freeze in the same visit. Her bill went to $1,100, and it has not moved since. That is $1,900 a year, and it grows every year that her neighbor's bills grow and hers does not. Here is the self-disqualification I need to break, and it is the strongest one in this whole video. People assume that because they own a home, they are too well off to qualify. It is backwards. These programs exist specifically for house-rich, cash-poor seniors. Owning the home is the requirement, not the disqualifier. And the second one, I would have heard about it. No, this is a county-level program, and the county's job is to assess and collect. There is no outreach. In most counties, the application is 1 page, it is free, and it has a deadline, usually in the first few months of the year. The exact words: you call your county assessor, or your appraisal district, or your tax collector, whichever your county calls it. I am over 65 and I live in this home as my primary residence. I want to apply for every senior property tax relief program this county offers: the senior exemption, the assessment freeze, the circuit breaker credit, and the deferral. Please tell me the deadline for each one and whether any of them can be applied retroactively. Ask the correctly. Some states will go back 1, 2, even 3 years and refund you. Now let me tell you why this year in particular. 3 things are moving at once. The senior deduction I mentioned in number 3 is temporary. It runs through tax year 2028, and then it is gone, unless Congress extends it. Several states have raised their senior property tax exemption amounts in the last 2 sessions, which means the answer you got from your county 5 years ago is out of date. And the Part B premium has gone up again, which makes the Medicare savings program worth more this year than it has ever been worth. Every one of these has a deadline, an application window, or a limited number of retroactive months. None of them wait for you. Let us add it up, honestly. The property tax relief, about $1,850 a year. The Medicare Part B premium and the copays behind it, about $2,900 a year. The federal income tax and the preparer's fee, about $940 a year. The phone and internet discount, about $210 a year with the plan change. $5,900 a year. And that is before the hospital bill, which is not a yearly number. It is a five-figure number in the year you need it. $5,900 a year for 20 years is $118,000. That is not a windfall. That is not luck. That is just the difference between the person who asked and the person who did not. I want to finish where we started. Verna Whitfield in Sedalia is 75 now. That $9,400 hospital bill is gone. The whole thing, written off under a policy that was sitting on that hospital's website the entire time she was mailing them $25 a month. They refunded what she had already paid. $275 came back. She said the part that stayed with her was not the money, it was the 11 months. 11 months of opening a drawer, looking at that envelope, and feeling like she had done something wrong by getting sick. She had not done anything wrong. She just did not know there was a form. That is the whole thing. That is every video I make. There is almost always a form, and almost nobody tells you. So here is what I want you to do this week. Not all 5. 1. Pick the one that made you sit up. For most of you watching, it is going to be number 5, the property tax, because it is the biggest and because the county is the easiest phone call to make. Write down the exact words. Make the call on a weekday morning when the wait is shortest. And if the first person tells you no, ask for a supervisor, because the first person is very often reading from a script that does not include the thing you are asking about. And please, send this to somebody. If you know a person over 65 who is paying a hospital bill in $25 installments, or who wrote a check to the county last month, send them this video. That is not a favor. That is money. I am Ellis Grant. I am not a lawyer. I do not work for the government. And nothing here is legal or tax advice for your specific situation. The rules vary by state and by county, and you should confirm your own with the offices I named. What I can tell you is that all 5 of these are real. All 5 are free to apply for, and every one of them is waiting on the same thing. Somebody has to pick up the phone. Nobody is going to call you and explain what you are owed. That part is up to you. If this was useful, subscribe and turn the bell on. I read the rules so you do not have to, and I will see you in the next one.